AI and the future of finance, a game changer or a ticking time bomb? Imagine this: you wake up one morning, grab your phone, and check your bank balance. But instead of a generic banking app, an AI assistant greets you with a personalized message. Good morning. Based on your spending patterns, I suggest saving an extra $50 this month. Also, I've reallocated your investments to maximize returns and minimize risk. Sounds futuristic, right? Well, the future is here, and it's already happening. Artificial intelligence, AI, is no longer just a buzzword, it's a driving force behind the evolution of the financial world. From robo-advisors handling your investments to AI-powered chatbots managing customer service, AI is transforming the way we manage money. But with this shift comes an important question: is this a technological breakthrough we should embrace, or is AI slowly becoming a dangerous force that could eventually disrupt the entire financial system? Let's dive deeper into how AI is revolutionizing the finance industry, what it means for everyday people like you and me, and whether AI can truly replace the traditional methods of managing money. The rise of AI in finance, from buzzword to billion-dollar industry. Artificial intelligence in finance is no longer just theoretical or confined to sci-fi movies. AI's presence in the financial world has been steadily growing, with companies adopting it for everything from investment management to fraud detection, to customer service automation. But what does this look like in practice? 1. AI-powered robo-advisors, the rise of the machines. Let's start with one of the most well-known applications of AI in finance, robo-advisors. These are automated platforms that use AI to provide financial advice and manage investments with minimal human intervention. Some of the most popular robo-advisors in the market today are Betterment, Wealthfront, and SoFi. Robo-advisors analyze your financial situation, things like income, expenses, goals, and risk tolerance, and then use algorithms to create an optimized investment portfolio. They also monitor and adjust your portfolio as the market changes, ensuring your money works for you even while you sleep. What's so great about robo-advisors? 1. Low costs. Traditional financial advisors charge hefty fees. Robo-advisors typically charge a fraction of that, making investment management accessible to a wider range of people. 2. Efficiency. AI can process vast amounts of data and make adjustments in real time, ensuring that your portfolio is always optimized. 3. Accessibility. With robo-advisors, anyone with an internet connection can invest in the stock market without needing an extensive background in finance. While robo-advisors are fantastic at providing basic financial planning and portfolio management, they do come with their limitations. Unlike human advisors, they don't understand your unique circumstances, emotional triggers, or life goals. So, while they're great for some, they may not be the best option if you have more complex financial needs. 2. AI and banking, revolutionizing customer experience. One of the most significant impacts of AI is in the world of banking. AI is helping banks improve the customer experience, making banking faster, more personalized, and more secure. AI chatbots, no more waiting on hold. How many times have you waited on hold for customer service, listening to endless, repetitive music? AI-powered chatbots are changing that. These chatbots handle millions of customer inquiries, offering instant responses to questions about your balance, transactions, and other banking services. Apps like Bank of America's Erica, Capital One's Zeno, and HSBC's Amy are already using AI-driven systems to provide seamless customer service, 24/7. Fraud detection and security. AI is the watchdog. In today's digital age, online fraud is a serious concern. With the rise of cybercrime, protecting customer data is crucial for banks. Fortunately, AI is here to help. By analyzing vast amounts of transaction data in real time, AI can detect suspicious activities in seconds, much faster than any human could. For example, if your credit card is used in a location where you don't typically shop, AI will flag it as suspicious and might even block the transaction. This process is incredibly efficient and reduces fraud by instantly acting on potential threats. AI-driven lending, a revolution in loan approvals. Another area where AI is making waves is AI-powered lending. Traditional loan approvals involve a lengthy process, where human loan officers evaluate applications, sometimes leading to delays or even bias. AI, however, can analyze loan applications more objectively and in real time. Companies like Upstart and Kabbage are using AI to evaluate creditworthiness based on a wider range of data, including spending habits, education, and employment history, rather than relying solely on credit scores. This could potentially make loans more accessible to people who might not have qualified under traditional systems. 3. AI and investment management. Can machines outperform humans? When it comes to investments, AI and machine learning algorithms are taking over. AI systems can analyze vast amounts of data from global markets in seconds, providing real-time insights into trends and stock movements. Some hedge funds and traders are already relying on AI to perform high-frequency trades, analyze stock patterns, and even predict market movements. Take Renaissance Technologies, for example. This hedge fund has been using AI for years to outperform the market by leveraging advanced machine learning techniques. The AI identifies patterns in data that humans might miss, which could lead to better returns for investors. However, there's a dark side to AI-driven trading: volatility. High-frequency trading algorithms can react in real time to market conditions, but when multiple machines make similar trades at once, it can cause sudden price fluctuations. This has been a significant concern for regulators. Will AI-driven trading lead to another market crash? It's a real possibility, and AI's ability to impact the market so rapidly raises questions about its long-term implications. The pros and cons of AI in finance: balancing the scales. AI is undeniably reshaping the financial industry, but like any new technology, it has its strengths and weaknesses. Let's break down the major advantages and disadvantages of AI in finance. The pros. Speed and efficiency. AI can analyze and process massive amounts of data at a speed no human could match. It makes decisions quickly, whether it's approving loans or optimizing investment portfolios. Lower costs. AI reduces the need for human intervention, which means lower fees for consumers. Robo-advisors, for instance, charge a fraction of what traditional financial advisors do. Better fraud detection. AI's ability to monitor and detect fraud is unmatched. It can identify unusual patterns and prevent losses faster than any human could. Personalization. AI allows for hyper-personalized financial products. From individualized investment advice to custom loan offers, AI tailors solutions to your unique financial situation. Crossmark. The cons. Lack of human touch. While AI is great at crunching numbers, it lacks the ability to understand human emotions, motivations, or personal circumstances. It can't provide the empathetic guidance that a human advisor can offer. Security concerns. AI systems are vulnerable to hacking and cyber attacks. As financial institutions rely more heavily on AI, they also become attractive targets for cybercriminals. Algorithmic bias. AI is only as good as the data it's trained on. If the data is biased, the AI could make unfair decisions. This is a significant concern in lending, where biased algorithms could result in discrimination. Job displacement. As AI continues to take over more tasks, the potential for job losses in the finance sector increases. For example, many customer service jobs and financial advising roles may be automated in the coming years. Looking ahead, the future of AI in finance. AI isn't going anywhere. In fact, it's only going to become more integrated into our daily financial lives. What could the future look like? AI-driven investment advisors, personal financial coaches powered by AI, will be able to provide you with real-time, data-driven advice that is fully tailored to your financial goals. Blockchain and decentralized finance, DeFi. Combining AI with blockchain could completely disrupt traditional banking, creating a decentralized financial ecosystem that operates without human intermediaries. Smarter credit systems. AI will revolutionize how we evaluate creditworthiness, considering a much broader range of factors than just your credit score. AI for financial literacy. Imagine an AI assistant helping you understand financial concepts, creating a smarter generation of investors and savers. The future of finance is likely to be a combination of AI automation and human oversight, where AI handles the heavy lifting and humans make the final decisions. Should you trust AI with your money? So, should you trust AI with your money? The answer is both yes and no. Yes, AI has immense potential to improve financial services, from making banking more efficient to offering personalized investment advice at a fraction of the cost of human advisors. However, AI isn't perfect. It lacks the ability to empathize, make nuanced decisions, and predict human behavior. The key is to use AI as a tool, let it handle routine tasks, analyze data, and offer recommendations, but don't rely on it entirely. Human oversight will still be necessary, especially when it comes to big life decisions and emotional financial guidance. AI is reshaping the future of finance, and it's up to us to ensure that this technological advancement serves us, rather than replaces us.